Hello, followers of the 4-Year Journey. This is Bob Loukas here in New York, coming to you from Station3 NYC on November 20th, 2023. I hope you're well. Coming up next month on 5 years of publishing this series. I hope you've enjoyed them. I've certainly enjoyed bringing them to you. It's been fun. It's been a wild ride, and I think the fun is only just beginning again for this next cycle. Today, on the agenda, there is a number of items I want to talk about. One, in the last video 2 months ago, I talked about a scare that was possibly coming, which of course hasn't materialized, and we'll get into that. I want to talk about the disbelief stage that we've been in every bull market phase. The early phase is disbelief. There's so many participants who still have scar tissue and pain from the associated bear market that was just before that. So we've been in this disbelief stage. I think a lot of people, more so on the retail side, are underexposed, and I believe institutions have actually been taking your Bitcoin and everybody's Bitcoin by accumulating in anticipation of what I believe will be a positive ETF announcement coming pretty soon. Of course, that's not a guarantee, so I'll talk about the negative component in the event that ETF is denied. Also, I want to talk about how we're now entering into, or we have entered, I believe, into the awareness stage of the 4-year cycle. So that stage really is all about finally people coming to terms with the idea that we are in a bull market and the final bear holdouts really begin to capitulate. And I believe we're right there right now. So it's going to be very important for us on this journey who have gotten in at the bottom again, that we only really have one significant role to play here for the remainder of the cycle. And that is what this series has always been about, is about how to navigate those emotions, how to navigate the markets in the light of a lot of volatility that's going to come. I want to talk and remind you of kind of your role in seeing this through to its conclusion, regardless of what that conclusion might look like and where it might go. We need to obviously have a game plan for how to tackle that awareness stage. And then, of course, what's ahead? What could this cycle look like? Maybe left translated, possibly like another right translated cycle like we've seen before. What does that look like? And is it too early to talk about that or not? It's good to put that in the back of your mind to set some expectations and to have that game plan ready to go. So let's get stuck into it. Let's talk about first the scare that wasn't. And in that last video, I showed you the weekly chart of Bitcoin here and how after making what we call a weekly cycle low, a cycle that typically comes around that 6-month time frame, had a perfectly normal decline after the first good sort of 4-month move off the bear market lows. And this is where we got in right before this candle and the start of the 4-year cycle. So nice, good, clean entry. And that certainly helps in the hodling and being able to sit comfortably into a position. And we saw Bitcoin come up from that $17,000 level all the way up to 31, and then down into sort of a 9-week decline, which was very, very expected or very normal for Bitcoin or any asset class to go through an ebb and flow manner into each cycle. And then when we came out of this cycle here, strong move here in June to test those highs, which did not go on to make another higher high, and in fact reversed at a time when you shouldn't be seeing a reversal in the cycle. So I was kind of warning in the last video that as we're hitting down at the bottom of this range and testing those June lows, that it looked possible, at least it looked possible to me, that we were going to see a move down towards the end of the year, maybe towards this, say, $19,000, $20,000 level. That was sort of a downside target in my mind. And I only pointed that out mostly or only really just to prepare yourself in the event that if we had that type of move lower, that you didn't want to sell your position. You certainly didn't want to sell it up at 25, 26, 27, but you certainly didn't want to sell it on a panic decline, because we've seen that in the past with Bitcoin. It has such extreme volatility at times, and when it goes down 20 or 30% in a very short period of time, even the most sort of dedicated and most disciplined holders of Bitcoin end up capitulating at times or panicking and selling, especially because at that point, it wasn't necessarily really confirmed that we're in a bull market. A lot of people had a lot of doubts back here in August over the summer, especially kind of with this double top look that was pretty common commentary on YouTube and also on Twitter. So it was all, it made sense that this would possibly drop down, and I wanted to warn you on that. Instead, what we had was the market reversed early and put in an earlier weekly cycle low right here before taking off here about 5-6 weeks ago from that $26,000 range, slicing right through the range that had developed with the April highs and the July highs. Essentially, at this point right here, I think putting a nail in the sort of bear's coffin at that point with new 2023 highs. This moment here, although I was more than confident that the bull market 4-year cycle was already in play, of course, by getting in early, but I think what this sort of told the market right here with this slice through back in October was that the 4-year cycle is in fact in a new cycle and in the bull trend and heading higher. So that ended up playing out well in the end for holders of the 4-year cycle. Didn't really get it didn't even get tested at this point. And in fact, since the $17,000 entry, there really hasn't been any significant test of note. Possibly the biggest one was in early March here, where we had this good decline from 25 down to 19. Otherwise, it's been a pretty comfortable, steady ride higher. Shouldn't be difficult for folks here to remain in position, again, especially because we're in nice and early in the cycle, and now the price has more than doubled since then. As everybody tries to work out what's going on and frets about a recession and a bear market, we comfortably got in, sat in position, and now we're just going to sit in that position, understanding that there will be a change in character, there will be a big or many multiple tests to come for holders, and that we will need to develop that plan to be able to withstand that volatility. So what does it mean to be in a disbelief stage of a cycle, and what does it mean by institutions taking your Bitcoin? Well, in the early phase of a 4-year cycle, when you've the new 4-year cycle always begins, obviously, from the ashes, essentially, from the worst of the bear market, the final capitulation that generally comes right towards the end of a bear phase. We saw that here with the FTX final decline, but we also saw that in sort of prior cycles, as you can see, when we had a move to 19,000 down to sort of 5, and then it went sideways, and then boom, you had that sort of final nail. And that leaves behind significant amount of scar tissue and leaves people kind of stuck like deer in headlight, waiting or wanting to buy, but just can't do it because of the pain that they've experienced during the last cycle. It's very important to understand that cycles, once they begin, it's the early entrants that really do take advantage of it at the end, and the people that are stuck in the past, in the rear vision mirror, looking at what's occurred, looking at what they've suffered, they are the ones that generally can't see ahead and realize that the markets are forward pricing in nature. And it just takes a long time for people to come around to finally accepting that the market has turned, that we're in a new cycle, and it takes significant price confirmation for that to happen. And that's what the disbelief stage is all about. The beginning phase, come off this 16, 17,000 level, everyone was kind of expecting another decline here after this 7-8 week consolidation in December. At that point, of course, there were bankruptcies everywhere, FTX, a lot of people had their funds locked on exchanges, so it just looked as dire as it can come. But of course, all cycles typically turn right at the worst time, when there is obviously, sort of, to use that analogy, blood in the street. That's exactly what we had, and that's when we turned, and we turned sharply. And even this early move from 17,000 straight to 21, and then two or three weeks later to 25, just left people behind, not really able to buy. And the ones that did buy probably got shaken out right away with that move down in March. Then we had this sort of 2 candles, and before you knew it, Bitcoin was back to 28, 29,000 or 30,000. People felt as if they really kind of couldn't get in. Then the market threw everybody really some curveballs right here during this April through to October timeframe, where it just went mostly sideways and chopped around. People tried to get in and out, and really got turned, and their account got churned around. And that, of course, left people here thinking, again, with a Fed raising rates, I should say, and a possible or likely recession, of course. Remember the yield curve? Every single YouTuber out there was talking about the yield curve inversion, and everyone was afraid to buy Bitcoin, and then boom, it moved higher. Now, what I believe has happened here, obviously the ETF pending or possible approval that's out there has driven a lot of buying, a lot of interest. And we see this with open interest on traditional TradeFi exchanges like CME, for example, where and options marketplaces where there's just been a lot of interest in taking some position ahead of a possible ETF approval. So the institutions, in my opinion, are the ones that have actually been buying this time around as opposed to prior cycles, which has really been about more the retail crowd. It feels as if a lot of the Binance volume, for example, where traditional retail folks would generally trade, have been kind of secondary. They haven't been driving the markets, and the interest has been declining more so. So this has been driven by a lot of onshore US-based buying, from what I can tell. And it's not giving the retail folks any real clean opportunities to get into a position. Of course, I'm aware that most people do have a position. Obviously, you as followers, I'm hoping you're fully loaded from those 17,000 levels. But it does feel just more from sentiment and from what I hear on social media and everything else as a whole, that people are kind of struggling to get that position, thinking the price is too high, or expecting at least a pullback to buy comfortably. And in a strong bullish market, sometimes the market just doesn't give you that opportunity. It just keeps on going higher and keeps on moving higher. And that's kind of the environment we're in right now, where we've had this 5, 6 green candles, and we're moving higher. We're certainly in the awareness stage now. We're out of the disbelief. I don't think anybody that's serious can possibly believe that we're in a bear market of any type. That's just an outrageous position to take. I know there are some out there, but yeah, we've got new sort of 16, 17-month highs in place in a new 4-year cycle that couldn't be any clearer. So we're in the awareness phase now. People want to buy in, and dips are being bought, and there is a lot of anticipation for an ETF approval that lies ahead. And that's holding this market higher, sort of running consolidation higher here. That, to me, speaks more to the possibility that this market will want to shoot even higher and continue that move and lock people out. Now, as we know, with an asset class like Bitcoin, that volatility is always around the corner. A 30% decline can take place in 72 hours very easily. And we know that as holders of a 4-year cycle, because our plan is to hold over not only multi-months, but even multi-years during a 4-year cycle. So that volatility is only an opportunity, but we know that can come at any given time. So let's talk about the ETF impact here. Obviously, there's already an impact. There's obviously a significant amount of buying that's been going on in anticipation of an approval. Now, I don't have the answer to whether or not it will be approved or not. There are very, very few people that do. But the market feels as if an approval is coming. And generally, with so much sort of traditional finance and institutional money coming in, I get the feeling that this approval is going to be coming in the next sort of 4 to 6 weeks before these deadlines are due. That is my read, at least, of the tea leaves, and that's what the market and the price action, I believe, is telling us. And people have said, well, isn't that going to be sort of a sell the news event? Isn't that priced in? And my thinking is, no, it's not, for a number of reasons. One, when you look at where we stand in the 4-year cycle, here's the monthly chart, which, by the way, is just picture perfect, running to script, as good as you can get, essentially, with now just 9 to 10 months in from the last 4-year cycle. So we're in the most advantageous sort of phase of a cycle, of a long 4-year cycle. So the tailwind is behind this market. So when you get extremely positive news, something like an ETF approval that really has been 10 years in the making, we've gone through kind of these ETF is coming narratives many, many times over the cycles. But if it were to actually arrive this time around, I think what's different this time around is that in the past, back in 2020 and 2017 and other periods where we talked a lot about an ETF approval, I don't think the general market was was in a position to embrace an ETF wholeheartedly, as it is today. When you look at sort of some of the traditional financial news media, and you look at CNBC, for example, the narrative towards, or the view and the sentiment towards Bitcoin by not just the analysts and the presenters, but essentially anybody that comes onto these shows, there are very, very few skeptics anymore for Bitcoin. Most either have a neutral stand or a very positive and bullish stand. Of course, that's because they see the potential for themselves and their traditional firms, institutional firms, to take advantage of this. But that also extends more broadly to the general population. I think now Bitcoin has achieved a level of awareness and has moved from kind of that scammy, fake internet money kind of viewpoint that everybody held to, yeah, this actually makes some sense. I understand it, and it's been around through boom and bust cycle now 3 to 4 times that it's legitimate. And the reason I bring this up is the environment is ripe where if these ETFs get approved, that the follow-on capital inflow, the ability for wealth managers and investment advisors, for example, to convince their clients to allocate some of their funds towards Bitcoin is now in place. So seeing these get approved, I think also means that it will be followed by real and significant inflows into the space and into Bitcoin that will help drive this up. Of course, we're going to get at some point soon enough a volatility event that's going to result in a downside move. I don't think it happens, though, on an approval itself. I think what's more likely to happen is if we get the approval that Bitcoin puts in another very, very big candle, follows through, and extends in the short and intermediate term into a pretty significantly overbought level. And it's at that point, possibly 2 to 3 or 4 weeks post an ETF approval, that Bitcoin could probably top in the short term, pull back that 30%, shake everybody out, and then resume that bull market 4-year cycle uptrend. So on the weekly chart, what that might look like, for example, is from this level here, another extension similar to what we had over the last 5 or 6 weeks, possibly again with a small dip in between that, leading up to an approval. But a good move and a sizable move as high as, say, 47, 48,000, a $10,000, 30% move from this level would not in the least surprise me one bit at this point. Like I said, the tailwind is behind Bitcoin, the narrative is there, we've sort of cleaned out the last bear market, and the surprises in this market would come to the upside. So a good solid extension up to this level, followed by a pullback, a first real shakeout of the 4-year cycle that would likely come from that point. Now, how do you play something like that? Well, I'm hoping you're immediately going to say, I'm not going to do anything at that point, because when you ride the 4-year cycle, it's not designed for you to be a trader. It's designed for you to get in at the lows, which we've done again at 19 and 17,000, like we did the last cycle. And then it's designed for you to sit in that position and ride that position, ignoring, even when it feels to you that it's obvious that a decline is coming, for you to ignore that temptation to sell. Because in a very powerful bull market, you may think you have a good read in this market and you want to get cute on your position, try and pick up some extra Bitcoin because it's extended, or you're just afraid of losing all that big open profit that you're showing. And that's when you make possibly a critical error. And by that, what I mean is there is a time when the market can just not look back and continue and continue and continue to the point where if you had sold, you're underexposed or you have no exposure, and you end up buying back because you can't stand seeing Bitcoin go up another 20, 30, 40, 50% in a short period of time. And that's exactly when the local or the intermediate top would occur. So you have to resist that urge to begin to trade around your position. It's just not worth it in the end. We're looking for gains in a cycle, if it goes like prior cycles, that put the need for trying to trade a position aside, right? You're not going to beat a great buy and hold strategy over a 4-year cycle if you can get in early, like we've done. If you can get into the bottom, you're going to beat everybody else that waits for the confirmation, that waits for the bull market, that's getting in at 24, 25, and is trading around that position. You're going to beat them every single time. So the beauty of this is buy and hold. We make 5 to 7 or 8 sort of transactions in a 4-year cycle, and you go on and you live your life, and you still manage, hopefully, to get a great return from the strategy as a whole. Now, what happens if the ETF is denied? Well, I think that's actually going to be a big news if it was denied, because there is quite a bit of sort of pent up or built up action here related to a pending ETF approval. Certainly, I think from this range, with $25,000 range, up to this level, it's anticipating an approval. And if a denial was to come, I think you're going to see a pretty sharp sell-off. I don't think you want to be selling even in that case. Because if an ETF approval comes, I don't think it changes ultimately where we end up in the 4-year cycle. And some may argue that a denial, again, is better for the Bitcoin ecosystem as a whole. It's better that Bitcoin remains in the hands of you and I and the average sort of Joe around the world, and it's in self-custody, and that's really the intent of Bitcoin. So I think ultimately it may be perceived as a positive, but it still would, of course, result in some short-term pain, possibly even a 3 or 4 month move that goes lower. I think the lower boundary here of this prior range around 24, 25 would still provide a floor in a denial, but don't be mistaken that, yes, there would be some short-term pain or intermediate-term pain in a denial by the SEC of an ETF to come. But when you look at sort of prior cycles, all that might mean is that we just may go back on track to something similar to this 15 to 17 cycle, which was the cleanest cycle that we've seen, and currently we're sort of mimicking a lot of that right here. And the way we've started this cycle, to me, resembles a lot of the 2015 and 2016 move that we had. And a denial of an ETF could, of course, send price back to the 25,000 range, right where the 10, or just right below the 10-month moving average, maybe consolidate a few months, but then continue on. I think ultimately, even with a denial, that Bitcoin has the momentum in the 4-year cycle. It's still in this growth phase overall from a long-term perspective. And I think it still would recover and continue on and do well. And then possibly on a denial, what that might mean is that the ETF approval will come in a year's time or 2 years' time, and possibly right in time for when the 4-year cycle is expected to come to a top around that sort of 30 to 38 month range or window, as you can see illustrated by this chart. A couple of ways that can play out. Now, again, just going back, I do think it will be approved from what I just my read of sentiment in the markets as a whole. And if it does get approved, then it does open up the possibility for the left translated cycle thesis that I've talked about many times before. So I'm going to combine now the awareness stage and your role and also what's ahead, just kind of closing up the video with what's ahead. So really what is ahead in theory is a 4-year cycle that is mirroring the prior cycles. And if we are to look at sort of what prior cycles have done, of course, a prior cycle does not in any way guarantee that you'll see something similar in this cycle, but it still is worth kind of just painting somewhat of a picture here to what potentially could come from a cycle, especially one that sort of somewhat mirrors the 2015 to 17 cycle, or even less so would be the 2018 to sort of 2021 top, which still wasn't a horrible performer by any means. Those two cycles, if they were to play out, sort of point to a $200,000 to a $900,000 or so Bitcoin price in the next cycle. Now, of course, there's the idea that we'll see diminishing returns. The last two cycles had returned less than the prior cycle. So Looking at that, then maybe there's a target of around about 120, 130,000. The point, though, really is that there's 2 points here. One is we're never going to know where this cycle tops, and it doesn't matter what your favorite analyst online tells you or what their price prediction will be. It's really just like throwing darts at a board. We just don't know. What I'm more focused on here is the 2 scenarios of whether or not we're going to see a repeat right translated cycle, and they were very consistent, month 33, 35, and 35, bringing us towards the end of 2025, 2 years from this point. If this cycle plays out like the prior 3 cycles played out, then we've got almost 2 years of a bull market ahead of us. It's a very, very long time for you to remain disciplined and patient and in that position, with the goal being, and I said this very thing in that last cycle, with the goal being of just sitting in that position and focusing on that upper box right there where the timing for an expected next cycle will occur. That would be the easiest path. Now, there's nothing easy about holding a position that you got in at 3,500 or more recently 17,000, and now seeing Bitcoin trade in the $100,000 range and possibly 200,000 and jumping by $5,000 or $7,000 in one daily candle. That's not going to be easy, and we'll get to the emotion of that in future videos. But right now, this is the prize, and we're looking to solidify our strategy and our plan to understand that we will see volatility. We'll see possibly, if it unfolds this way over the next 2 years, probably at least 4 to 5 events where Bitcoin declines by more than 30% over a short period of time. And how you respond during those 4 to 5 periods of volatility are going to be highly and extremely important to the performance that you get out of this cycle. Because you just make one mistake and you can give up quite a lot of Bitcoin by selling too early, buying it higher. It then becomes a local high. Now you've all sort of shaken up and you're kind of mad at yourself for making those changes mid-flight, and then your strategy is forgotten and you're kind of now investing on tilt, to use a poker analogy. You don't want to do that. You're in early, and if you didn't get in early and you got in a little bit later on, it doesn't matter. It should still be early enough. That's just the price of admission for getting in late, but you're still early enough, and the goal is going to be to ride out that cycle. The only difference here might be with an ETF approval is it might provide the type of FOMO that could drive this monthly chart up sharply and quickly and early. And I do think that's a possibility right here, that if we were to see in a very short period of time Bitcoin go up and make an all-time high well before even, say, the halving or the midpoint of this 4-year cycle, then that to me would be the most difficult scenario to invest or trade on, because it doesn't fall in that expected window like it has in the past. So to see Bitcoin over the next just a few months. So for example, here is sort of your 48 4-year window. If you go to sort of that 24-month period, you get to November of next year. That's the midpoint of the cycle. We should be seeing Bitcoin, excuse me for that. Let me just use the arrow here. So Bitcoin here should not be making a new high above that sort of $70,000 range before this November high. In prior cycles, it took, in this cycle here, it took 26 months to get to a high. And in this cycle, it took right there, 23 to 24. So right at the midpoint. That's essentially roughly where Bitcoin should be making its new high in the cycle. If it gets there well before that point and well before the halving, say for example by February or March of 2024, within 14 to 16 months from the lows, then that is far too bullish, far too quick. That would have the profile of a blow-off move or a left-translated cycle. So again, it's way too early to even really worry about this. We would worry about this, I would say, by around January if we saw this current candle and maybe next month in December come up towards sort of 49.50, which I think on an ETF approval would be expected. But we should also see that shakeout, that volatility event in the following month in January, bring it back down to earth somewhat, shake people out, and then also then resume a more normal path forward. If it were to shoot up to 50,000 in the following month, shoot up to 65,000, the following month shoot up to 100,000 as an example, that would be the very character of a left translated cycle. Again, that would make it very difficult because you just don't know whether or not over just 6 months from there and say by the summer of next year, you're at 200 or 250,000. You just don't know where that top in the cycle would be, and would make it very difficult. It's much better to have a cycle make and push big FOMO, broad bull mania in this window, because it makes it easier to then make the assumption that the final leg of the bull market is in place. So we're going to be watching out for that in future videos. Again, a little bit early to tell, and how it responds to any positive ETF approval is going to be very important here in determining whether or not a left translated cycle is in play. But given that we've had 3 prior cycles that have fit a picture perfect pattern, we are going to be due, and if it doesn't come in this cycle, I think it's definitely going to come in the next cycle. We're going to be due for a complete shakeup of the whole narrative. Now, it doesn't change the Bitcoin 4-year cycle process. People have said, oh, at one point it's going to get wrecked. The Bitcoin 4-year cycle can't get wrecked because it only mirrors price action. And what it essentially tells us is that every 4 years we're going to get sort of a washout. And the washout, I think, will happen no matter what around that sort of 2026, 2027 timeframe. That will occur. The question for us is more about the translation of the cycle and where does that peak occur. If it occurs early, then essentially what that means is we're going to get a nastier bear market. Because if we peak before the midpoint, say on month 20 or 22, or even 24 at the midpoint, unlike prior cycles where you had 12 months, 13 months in decline, now you're going to have, because again, 4-year cycle is anchored on the lows, now you're going to have 24 months. So where you had 12 months of bear markets in the past, you would have 24 months of bear markets. So that's the difference when determining what a 4-year cycle looks like and what a 4-year cycle is. So in summary, I know this has been a 30-minute video and I probably haven't told you anything you don't really know or what you haven't gotten from 4 years of listening to these videos. But the awareness stage right now, this is the stage where everybody starts to really believe in the bull market narrative. And that's when we start to see acceleration and adoption and more news media, more attention in general. And that's when the volatility becomes more frequent and more significant at times. So your role here is simply, if you've chosen to allocate a certain amount or all of your portfolio to a strategy like this active hodl strategy, which isn't just pure hodling, it's not investing where you're more active, it's making select few and far between select actions at the extremes of the market, at the lows and at the highs, or hopefully as close as possible to the highs. And that's your role. In between that, your role is to simply go out and garden, play with your kids, get back with your friends, do some reading, learn some more in general, at least when it comes to the investing component. This is supposed to be a very hands-off approach. And to be hands-off, you really have to get your mind in the right place. And when you start looking again at open profit, you start refreshing price and you start seeing bullish, positive action, and everybody's starting to trade all the other altcoins and the NFTs and everything else. I'm not saying you shouldn't trade those, because obviously I know many of you know that I trade quite a bit of those, but you have to separate those. You have to be able to separate your mindset and your physical accounts between the two. One strategy here involves doing almost nothing for a very long period of time. If you want to play around with everything else, of course, by all means do that, but do that with a different mindset in place. Resist the urge to allocate from your successful portfolio, this Bitcoin hodl strategy, resist the urge to liquidate or sell positions to go buy more of the shiny stuff that you think people are making a lot of money on. They're not making a lot of money on. There's a few that are, and the majority of them are getting fleeced as they're getting in at local tops and getting liquidated by trading leverage on some of these exchanges. You have to resist that urge. The slow and steady pace of this strategy has demonstrated that it will get you there, and it can get you there, and it gets you there in a far more stress-free manner. So with that said, coming on here on 35 minutes on this video, I want to wish you all a great holiday period ahead for everybody sort of in the US. Happy Thanksgiving. And of course, the next video won't be out until probably January at this point. So I want to wish you all a great holiday period, a very Merry Christmas, Happy Hanukkah, and so on. Thank you, really thank you for listening. I appreciate you sharing this video. It's been a great, fun ride, as I mentioned. Let's keep it fun and stay in the position. Wishing you all the best. Checking out from Station 3 in New York. This is Bob Loukas. All the very best.